All right. Good evening, everyone. It's time to begin. So I see we have quite a number of you guys here. Welcome to you all. Can everyone see my screen? Just let me know if you can see my screen in the chat box. Wonderful. Okay. So this evening, we're doing basically how to use the RSI to trade with the trend, right? So we're looking to trade with the trend using the RSI and trend lines. How many of you know anything about the RSI or trend lines? Just let me know in the chat box. What do you know about the RSI? What do you know about trend lines? Okay, Ryan says he knows about trend lines. Okay, so you know how to draw a trend line. What do you know about the RSI? Just let me know what you know about the RSI, Relative Strength Index. Okay, not much. Okay, no problem. All right, so I'm going to show you guys a little technique, just a little technique. Oh, I see Ryan says the RSI is a lagging indicator. Sorry, but the RSI is actually a leading indicator, right? So the RSI is slightly ahead of price. So that's what makes it my favorite indicator. All right, Ryan, apology accepted. Yes, that's my favorite indicator, right? So it's a leading indicator, it's not a lagging indicator, and it is awesome. Okay, so let's jump into our chart. So here I have the euro dollar, US dollar pair. You guys can name any pair that you'd like. You know how we do it. So you can name a pair and we'll go to that pair and we'll work with it. Okay, so give me a pair and let's work with it. Ryan says too many tools in the toolbox. Well, Ryan, it's good to know all of the tools or know as many of the tools as possible, especially at the beginning of your journey. And when you feel comfortable, what you do is you select the tools that work best with you, right? So you select the tools that work best with you and based on your strategy. So from there on, everything becomes a bit more smooth, right? You don't need to have a bunch of tools on your chart confusing you. The main thing, understand price action and find yourself a good indicator that's going to help you. All right, so let's see which one came in first. First come, first serve. Ryan says EN, so I am assuming that that is euro dollar, New Zealand dollar. Am I correct? I prefer to use pairs that are, with the between the European and US session, but I'll work with this one. Right? I'll work with this one. Let's see. Okay, let's use this feed. All right, so that's the one you wanted, right, Ryan? EURNZD. Yep, okay, great. All right, Ryan also says RSI, cloud, alligator. Okay, that's all the indicators that you have up. You have quite a few. All I like is what you see on my chart right now. I don't really use any other indicators. I used to use the stochastic, but I realized that I don't really need to use the stochastic because I've evolved so much from the stochastic and the basic RSI that I have my own RSI settings, and I don't really need to use the stochastics indicator anymore. So you're looking at the 200 MA. This I find is one of the MAs that work best for me. It acts as a very good dynamic support and resistance. Anytime price comes to 200 MA, I'm out of my trade, right? If I'm buying, it hits this, I'm out. If I'm selling, it hits this, I'm out. okay? Because normally it's going to bounce off it. So that's also information. We could have a different, we can have a whole class in the 200 MA. So I'll leave this one alone for now. Okay, so let's jump into the RSI. So the RSI, as you can see here, I have it set with a period of 30, right? Now, you know the average setting for the RSI is 14, right? And a lot of traders use the RSI setting with 14 because it kind of helps them with the trend, right? But I use the RSI with a period of 30, and I find that it works great this way to help us stay with the trend, okay? So let's take a look at that. Give me a date that you'd like me to go back to. So just give me a date and I'll scroll back to that date. All right, so we'll put the date in here. Give me a date. July 1st. Okay, let's see here. July 1st. Good, so we've gone back to July 1st. Let me make sure that we're at July 1st. Okay, where's July? Okay, July 1st is right around here. Good, wonderful. So July 1st. Now, how am I gonna trade this? First thing first, I am not necessarily looking at the longer term trends. I'm looking at the shorter term trends, right? So first thing I wanna do is draw a trend line. So this coming up to July 1st was my trend, right? So this was my trend. As you can see, I'm just looking at the short term, right? Let's make this a little bigger. So I'm just looking at the short term. This was my trend coming up to July 1st, as you can see here. So July 1st is right around this area here, right? July 1st, right here. So this was my trend. And now we have a new trend forming, right? So we had price breaking down of this trend, coming down, and I'm looking for a reason to get into this trade, right? So let's see here. What day was June 30th? Let's see. It was a Wednesday, right? So if this was a Wednesday and I'm looking to get into a trade, I can see here that price broke this trend line. And usually whenever price breaks the trend line, we're either going to go into consolidation or we're going to go into reversal, right? It's one of two things that's going to happen. We're either going to go the opposite direction of the previous trend, or we're going to consolidate for a continuation of the previous trend, right? So here we got a breakout, price came back, retested, and now we're going down. And you know this retest is usually our wave 5, right? So we got 1, 2, 3. This is, let me see here. Yeah, so this is wave 4, and then this is wave 5 here. So this is a complete wave to the upside, right? Wave 4, in a lot of cases, always breaks out of the trend. Okay, then wave 5 comes back and retests the trend, and we will go into a full-on reversal, or we'll go into a 3-wave correction. It all depends. Okay, so here you can see that we broke out, we're coming down. We are looking for a reason to get involved in this trade, right? So whenever price is above the 50 line on the RSI with a setting of 30, it means that you are bullish, right? So whenever price stays above, you're bullish. Whenever price stays below, you're bearish. Okay, so keep that in mind, write that down. Whenever price is above the 50 line with RSI 30, you are bullish. Whenever price is below the 50 line on RSI 30, you are bearish. Okay, good. Now that we've got that covered. So here you can see the price was above, we broke out the trend line, and whenever you break out of a trend line, you're no longer looking to continue with the trend. Okay, so this was the trend up, you broke out of the trend line, you're no longer looking to continue with the trend. You're looking to go in the opposite direction. So what you're looking for is for a candle to close below the 50 line on the RSI. So once you have a candle close below the 50 level on RSI, it means that you could be looking at going short. Okay, so now if I'm looking to go short, what I'm going to do is I'm going to enter, and I only want to enter at specific times. Remember, we covered this in one of my previous classes, sniper entries. This is where we were looking at the specific times to get involved in the market. Now, this is Euro NZD. I don't typically trade this pair, but this is a pair that you would normally trade in the Asian session and European session, right? You could also trade this pair in the US session, but what we're looking for is a candle to close below the 50 line. And once we have a candle close below the 50 line, we can look to go short, right? And why? It's because we broke out of this uptrend. So because we broke out of the uptrend, we're looking to see if we can catch the next direction, which is down, okay? In most cases, it's going to be down. If it's not going to be down, we will know, all right? So we have a candle close below. Let me just try to put in a little arrow here. We have a candle close below, right there. We have a candle closing below. You can see it. I'll put in another arrow on the chart. Good. So this candle closed below, as you can see, or maybe I should put a line in here as well. I'll put in a vertical line. Good. So you can see that the candle closed below. I don't need to use the arrows. I'll use this vertical line only. Good. So you can see that this candle closed below. Now, with us having that candle close below the 50 level on the RSI, it's telling us that potentially the price could be going to the downside because we're below the 50 level, and below the 50 level is bearish. Okay, so where do we put our stops? We put our stops above the swing high. Since we're going short, our stop goes above the swing high. That would be the safest place to place the stop, right? So the stop would go above the swing. So your stop goes above here. Let's just put this in red. Use this one. Okay, so the stop goes above here. Your entry was around here. Entries here. We'll put the entry in, let's use blue, right? So this is your entry, this is your stop, okay? And if you're looking to swing this, you're just gonna hold on to your trade. If you get stopped out, you're out of the trade. If you don't get stopped out, you hold on to the trade and you allow it to run, okay? Now, the idea here is if you entered and the price came back and closed above, okay? So for example, let's use another line here. If the price came back, where's our vertical line? Okay, there it is. If the price came back and closed above, like here, right here on this bar, it came back and closed above. At this point, you want to exit your trade. Now, let's pay attention to the time of the day, okay? Remember, we're looking to get involved into the market at session open, session lunchtime, and session close time, okay? Because remember, we're dealing with a pair, right? So we're looking at the session open times, the session lunch times, the session close times, okay? So this closed at around 10 o'clock. Well, it opened at 10, closed at 11, right? So this is very close to our session close time. So this is not necessarily the ideal time that you want to get into the market, because this is going to be in the US session. And this is a Euro pair and an Asian pair, right? So as you can see, this is the US session here. So do you want to get involved in the US session? No, you don't really want to get involved in the US session because this pair does not necessarily have news coming into the US session. Maybe in some cases, the Euro pair may have news coming into the US session. That's high volatility news, right? But it's not always common that that is the case. So normally in the US session, you're going to find that it's going to be a bit choppy, right? So this is not the period of time that you really want to get into the trade, okay? So this is not a place where we would take our entry. We would wait. We would wait and look for an area where it would be best to take our entry. So we'd be going out throughout the course of the day, and we're looking, and let's see here, 2 a.m. Eastern Standard. So this is 2 a.m. Eastern Standard. We are still below the 50 level. This would be a nice area to look to go short. So this would be the area where you'd be looking to take your entry. It's pretty much the same as over here. So you'd be looking to take your entry at this level, right? This candle closed below the 50 level. So this is a good area to get involved, because what you would expect is that the price may likely bounce off the 50 level back to the downside. And you can see here, we did get that bounce back to the downside. Okay, now with us getting this bounce back to the downside, our stop, as I told you, is above here. Okay, you have two options to place your stops. You can place your stops above the swing, which is more of a conservative way of placing your stop, and you can place your stop above the current bar after close, or the immediate swing. When I say the immediate swing, I mean one of these over here, right? So you entered here, this would be the immediate swing, right? This is the highest swing from where you entered. You could place your stop here, right? This is more of an aggressive approach, all right? Now, we entered here, price pushed down a little bit. This closed at around 4 o'clock. Now, with it closing at around 4 o'clock, as you guys know, sorry, it closed at 5, because this is our, okay, it's 3 to 4. Yes, it closed at 4, and this is our 5 o'clock candle opening over here. Let me make this a little bigger, right? So this is our 5 o'clock candle opening over here. Now, around these times, you can expect a shift, right? Because this is in the European session, we can expect price can shift in the opposite direction. So we did get a shift. It did come up, but because we got a good entry, we're still in our trade. If we placed our stop over at this swing, it would have come stopped us out, okay? But if our stop is up here, we would not be stopped out, all right? So once the price closes back above, you wanna exit anyway. So the price closed back above the 50 level, you wanna exit that trade. What this means, the price is not ready to go down, okay? So this is telling you that the price is not ready to go down. So you would exit once the price closes above the 50 level. Now, the next entry that you'll be looking for is going to be at inside of the European session or inside of the Asian session. So you're looking at the beginning of the Asian session, or you're looking at the lunchtime of the Asian session, or the beginning of the European session, right? So let's see here. So we exit here. That's 7, at 8. Price came back, closed below, as you can see here. Price came back, closed below. This is another area where you may be tempted to go short, right? So at this time, price closed below. If you went short, you could put your stop here, or you could put your stop here, right? These are the two options that you have. But if price comes and closes back above the 50 level, you're gonna have to exit, okay? Because it's telling you that price is potentially not ready to go down yet. So price came back above, you'd have to exit your trade, okay? And you wait. You will simply wait, all right? Now at this point, what you can do is draw a trend line, because what we have now is a swing low, right? So we have a swing low, and we simply trend it. trended like this, right? So now we have a temporary uptrend, okay? So we have a temporary uptrend, and we're not necessarily looking forward to get involved in this temporary uptrend, but based on time, this is also a situation where we could try to take advantage of this situation, right? So if this is a temporary uptrend and we have price closing back above the 50 level, if we go long on the close above, our stop will go below this swing. Our stop will go just below the swing, doesn't have to be too far. So just below the swing, you place your stop. And what you're looking to do is hold on to that buy trade until the price closes below the 50 level again. Okay, so if the price closed below the 50 level here on this red bar, let me just bring this one over. You can see here the price closed below the 50 level, right? So we have a close below the 50 level here on that red bar. You would exit your trade there. All right, so you exit your trade there, and let's see the time. It is 6. Actually, it's going to be 8 on the close. So on the close, that's going to be 8 a.m. Eastern Standard, right? So 8 a.m. Eastern Standard, you'd want to exit. So you'd exit that buy trade at 8 a.m. Eastern Standard, right? Now, here is where you're getting another situation where price is actually moving in the US session, right? Because from 8 to around 12, that's going to be the bulk of what you're going to get in the US session. The US session will end around 4 or 5 o'clock or so, right? So you have a situation here where you can take an entry. This is where you're breaking this trend. You have a candle close below. You also have a close below the 50 level on the RSI. You can actually look to go short at that time. You have a sniper entry at that area as well. So you can look to go short here. You can use the conservative stop method, which is place your stop above the immediate swing, or you can place your stop above the major swing, right? And you hold on to your short trade until price closes back above the 50 level, okay? So if you went short here, you can hold on to your short trade until price closes back above the 50 level. Now here you can see that we had quite an aggressive move to the upside, causing it to close above the 50 level at this area. Okay, so at that point, you would exit your trade. Now that's just one option. The other option that you have is if you want to day trade this, you would come from this level and you'd go until around 12 o'clock or until the end of the US session. So you're trading session open, session break, session close. Okay, so you entered in the US session. So you're looking at the US session lunchtime and you're looking at the US session close time. Okay, because you entered inside of the US session. Okay, so here you can see you're going until this is 12 o'clock over here. We have until 12. 1 second. So we have until 12, and you can either close out your trade at 12 o'clock if you see a reason to close out your trade. If you see a reason to close out your trade, you can close it out at 12 o'clock. Give me 1 second. Sorry about that. Good. So if you have a reason to close out your trade, which would be an opposite candle. So if at 12 o'clock, between 12 and 1 o'clock, since we're on the 1 hour time frame, you get a green candle close, you want to exit your trade. Okay, you exit your trade right away on the close of that opposite candle. Now we don't have an opposite candle at that time. Okay, so you can hold on to your trade until the end of the day. So by 4 o'clock, you want to make sure that you're out of it. Okay, any questions so far? All right, I see Ryan is asking, let me see here. Let's go through the list. Okay, I'm seeing Ryan says, please, could you add settings and what you put on your chart in the chat box. Okay, when you say what I put on my chart, what do you mean? We're using the RSI with a period of 30. All right, so RSI 30. And I like using this on the 1 hour time frame. That's pretty much it. It's nothing much to it. RSI 30, 1 hour time frame. Okay. Let's see what else we got here. We don't necessarily have to use the 15-minute chart for entries. No, just you can do everything from the 1 hour time frame. And Ryan says, so for day trading, you could use a pair like pound USD and enter as you explained. That is correct. If you're day trading, it all depends on where you're from. I prefer to use trades from the European session and the US session. I don't really like the pairs that involve the Asian session because they don't always move much in the Asian session. Whenever there's very high impact news coming out, then they may spike in the Asian session, and then that's basically it. You just get a spike and it just dies off. Okay. So I don't really like trading those pairs. I prefer to trade pairs that are in the US and European session. Okay, Bella said, where did you get the 50 from? Okay, when you go into the RSI, you can see here it says upper band and lower band. I just put 50 for both of them. Okay, you put 50 in the upper band, 50 in the lower band, and it does this. It puts all the lines in one place at the 50 level. Okay. Input length 30, source close. And that's basically it. Okay. 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 Any other questions? Let's see here. All right. So Ryan says, so TP is based on end of day and not necessary exit on the moving average. It's not a, okay, yes, it is a simple moving average. So you don't necessarily have to look at the moving average for your exit. No. Okay. But the moving average could be a good reason to exit your trade. It all depends on where you entered. Okay. So if you entered taking a buy trade and it's going to the moving average, and when I say to, I mean it has a good distance, then yeah. I mean, if I make 100 pips or I make 50 pips or I make 200 pips to the 200 moving average, of course, I'm going to close my trade because I'll expect when it hits that, it's going to bounce. And I don't want to give back the profit, right? But if I enter very close to it, I'm not going to exit because I'm entering very close to it. Okay, which means that it's most likely going to bounce off that moving average, or that moving average is going to be pressuring the price down or pressuring the price up. So it all depends on what my bias is at the time. All right, Grace says, thank you. Ryan says, or use the above with price action. Yes, use price action. It's better to use price action for your entries and use your session open, session lunch, session close times. Those are the times that you want to use to get out of your trade, along with price action. For example, you can use market geometry to measure the distance that you're expecting to get. So let's see here. For example, if this was the first move down, I would simply measure this. You could measure that and you can project it from the swing. And that gives you an idea where you expect the price to stop, right? So anywhere around that area, that's where you would expect the price to start dying off. You can get out of your trade in that area, okay? And that's if you're day trading. You can do it like that. If you're swing trading, you can do it like that as well. Okay, so this method can be used for both day trading and it can be used for swing trading. So if you're a swing trader, there you go. You can use the RSI with a setting of 30. That's going to help you a great deal to let you know how long to hold on to your trades for. Okay. So let's go back to our chart. All right, let me take this off. Good. So this would have been a lovely trade. This was a successful trade. And with this being a successful trade, what do we have now? We have what looks like a trend, right? So we have potentially a trend developing. So we have what looks like a trend developing. So am I going to take buy trades or am I going to take sell trades? I'm going to favor sell trades. Okay, so I'm only going to favor sell trades. So what am I going to look for? So the price came down. I caught this move. Now it's pulling back, right? So it's pulling back. So from here, it's pulling back. Let's create another trend. So we look at the price pullback, okay, because it's below and we're getting a pullback. So all we do is just trend the pullback, okay? So you trend the pullback and you wait. You can wait for the breakout because when it breaks out, we are below the 50 level. So if it breaks out to the downside, it means that we're more than likely continuing the trend to the downside, okay? So let's look at the times. Where are we looking to take our entry? We need to make sure that when we're getting involved, we look for a great area that's going to be in our best interest. So we're looking at getting involved since this is a Euro pair, New Zealand pair. We're looking at getting involved around the start of the Euro session or the end of the US session, right? That would make a great area. Even getting involved in the US session is okay, but you need to be careful with that because if you don't really have any high impact news event coming out of the European side of the market, you won't really get volatility in the US session. So you need to pay attention to that as well, okay? The high impact news events, they bring volatility into the market. And it doesn't necessarily mean that the volatility comes on the news event itself. The volatility could be there throughout the course of the day, okay? One of the only high impact news events that I would recommend that you guys stay away from, and when I say stay away from it, I mean stay far away from it. Interest rate decisions. Stay away from those. Those are extremely sporadic, right? So you could get involved, it spikes up, it spikes down, stops you out, causes a lot of problems with your account. It can be very, very volatile. So it's better that you stay away from those interest rate decisions. Doesn't matter what pair, okay? Just stay away from all interest rate decisions, okay? It's better on those days that you just stay out of the market. Just don't trade, okay? So here you can see we have, this is around the end of the US session. So this is, we're going into the Asian session now. So we're going into the New Zealand session. So we have a breakout. So we have price closing below. With us having price close below, we can enter short and our stop can go, if we're looking at using a conservative stop, the stop can go above the immediate swing, which is here, or it can go above the previous swing, which is here. Okay. Going above the previous swing is more on the conservative side, and this is more of the aggressive side. So using the immediate swing is aggressive, using the previous swing is conservative. Okay, so You could put your stops here if you want to be more aggressive, and you hold on to your trade. Price is going down. Where do we make an exit? So we have, okay, 1 second. I have this logged in on multiple devices. 1 second. Just give me 1 second. Let me resolve this. All right. Okay, where was I? Okay, I'm back. Good. So where do we exit this trade? We have our entry here. We have until around the beginning of the European session or so to get out. So here you have the beginning of the European session. You can exit around this area once you see an opposite candle. Here you can see we have an opposite candle between 2 and 3 o'clock. So at this area here, we can exit, right? This is 3 to 4. You can exit here, right? The next time you have the beginning of the US session, this is another area where you can exit, okay? So you exit around these areas here. Here you can see most likely it was as a result of some high impact news event. And if you want to check that, we can go to the economic calendar. All right, so we can go to the economic calendar and we can check that out. It was July 1st, right? Let me just confirm. It was actually July 6th, right? July 6th. Good, so July 6th. What happened on July 6th at 8 a.m.? Let us see. What do we have around that time? Okay, we don't have anything happening at 8 a.m., but we did have some high impact news coming out from the euro at around 5, right? So that could have been the reason for price moving up aggressively around that time. And since we're still in a downtrend, we're waiting for price to show us that it's going to be moving out of this downtrend. Okay, here you can see that we're above the 50 level now. We're no longer looking to sell because we're above the 50 level. We want to wait until we're back below. And one of the best times to get involved, as you guys know, we're looking at the session open, the session lunchtime, and the session close time, right? So if you want to get involved, I would not be excited to get involved after I saw this spike to the upside, because this spike to the upside could mean that we're starting a whole new trend to the upside, right? So this is not an ideal situation to get involved, because it could mean that we could start trending to the upside, right? So here you can see that looks like we have a close below over here, right here. So this is around the lunchtime in the US session. This is not a situation where I would be excited to get involved, because as I said, this is a Euro pair and an Asian pair. So this is not a situation where I'd be too excited to get involved at this time, unless there is some sort of high impact news or something on this day, right? And most likely there is not. So I won't get involved at that area. I would wait. And this is in the Asian session. So around the Asian session, I'd be more excited to get involved. So did I have a close below? On this candle, I had a close below, right? So we have a close below in this area. So this would make me a bit more excited to go short. So in a case like this, I could go short. Why? If we look at this from a patterns perspective, we have 1, we have 2, and this is 3 that's coming here. This wave could be short, could be long, okay? So if I took this trade, I can hold on to this trade until the price comes to a session open, a session break time, or the beginning of another session. Okay, so if I entered here, you can see I have until 2 a.m. I don't have a green candle, so I won't exit. I have 4 to 5. This is a green candle. I could exit at that point if I am day trading. Okay, if I decide to hold on to this trade, I could hold on to it until I have price come and close back above the 50 level. So if price is going to close back above the 50 level, it would be here. And this would make this trade more of a break-even trade, okay? Because it moved back to the upside very aggressive. Now, it doesn't always move back very aggressive in other situations. This pair is just moving very aggressive when it comes to moving to the upside in some cases. So it's spiking, right? So this one would have come back to more of a break-even type scenario. And as you can see, price came back, closed below. With price coming back and closing below, you want to pay attention to where you're going to get involved. And I wouldn't be too excited to get involved at this point. What I would want to do is trend this, right? So I'll trend this like that. And if I trend this, I can see that we have a short-term downtrend, and we could be getting a breakout of that short-term downtrend. So this could actually give me a early entry to the upside, right? It could give me an early entry to the upside. And if I'm going to take an early entry to the upside, I want to see this give me this breakout, and I want to see a close above, okay? A close above the 50 level. So here you can see I have a close above the 50 level. I can jump in here, take the early entry. What time is it? This is in the Asian session. So this is okay. I can get involved at this time. We just need to make sure that we're getting involved at a time in the Asian session when it's going to be lunchtime, or when it's going to be the start of the Asian session, or when it's going to be the close of the Asian session, moving into the European session. Okay, so this would have been a nice entry here. And as you can see, the price continues moving up, breaks out of the downtrend, and it continues going to the upside, right? So this would have been a nice situation where we could swing this one to the upside. We can swing this one until we have a opposite candle. So we have an opposite candle close. We just got to pay attention to where we get these opposite candle closes. So are we getting the opposite candle close on a session open, a session lunchtime, or a session close time? So this is around a session open of the US session. So we would exit in a situation like this. So as you can see, we would have been able to catch a nice big trade to the upside. Let's see how big this was. On the close of that red candle, this would have been approximately 162 pips, right? So we would have been able to make approximately 162 pips. This would have been a great trade, okay? It would have been, this trade would have been approximately, let's count this again from here. So this trade would have been approximately 13 hours long. So we could have had this trade for 13 hours, okay? And made approximately 161 pips. Now, it's good to pay attention to when you have an opposite candle close, because having an opposite candle close gives you a very good indication that the price is probably going to stop, reverse, or stall out. So around that time, you want to exit. And that's if you're day trading. Okay. If you're swing trading, then you'd wait until the price comes back and closes below the 50 level. Okay. And over here, you can see it came back and closed below the 50 level. But I'm sure you guys can see the difference between trying to swing this and day trading this. Day trading, I would always say, is much more effective. I prefer the day trade over swing trading any day. Okay, because when you swing trade, the price goes up, it comes down, it goes up, it comes down. Sometimes it goes into consolidation and you're just not really going anywhere in a lot of cases for a long period of time. But if you day trade, you can enter, you can exit within the course of that day and walk away with your profit. Come back the next day, you look for another entry, you walk away with your profit again. Okay, if you make a loss, the next day you can make up for the loss. All right, any questions so far, guys? Anything you guys are not too clear on? Let's see here. I see Ryan is asking, where can I see when the relevant pairs are best traded? Is there a URL to advise on this? Well, it's not a situation where you need to have a URL necessarily. It's a very simple situation. Try to trade the pairs inside of their session. If you have a Euro pair and a New Zealand pair, that means that it's best traded in the Euro session and the Asian session. Okay. If you have a Euro pair and a US pair, when I say US, I'm talking about Canada as well. So if you have a US pair and the Euro pair, then you're trading them in the European and the US session. Okay. If you have pound New Zealand, then that's a Euro session pair. You can look at it as Euro session, or you can look at it as London session, and you have an Asian session pair. So you trade it in the London, Asian, or you can start in the Asian into the London. All right, and you're going to avoid the US session. If you get involved in a US session, then you need to make sure that there is some sort of high impact news for one of the instruments, one of the currencies in your pair. Okay, and I would just simply just say, stick with the session for the pair that you're trading. Okay, so stick with the sessions that relate to the pairs that you're trading. You will see the best results in situations like that. Okay. Let's see here. What else do we have? Grace says, yes, I like day trading much better. Bella says, pound USD in which session? So the pound US dollar is London, US, right? Or you can say European session, US session. So you're looking at from 2 a.m. Eastern Standard to 4 p.m. Eastern Standard, right? So that's going to be London session, US session. And you know, with the US session, we want to stop trading at around 12 p.m. Eastern Standard, because from around 12 p.m. Eastern Standard, it kind of dies off. Okay. Grace says, is there an easy way to know how many pips to anticipate on a trade? Okay, well, I showed you guys the market geometry. So with market geometry, what you can do is you can measure the first impulse. So you have, this is an impulse. You measure that and you project it from the end of the correction. And you can say, okay, I can expect to get this distance. Okay. Now, if you're expecting this as your distance, anytime it makes that distance, you will be looking out for some sort of reason to exit. So if you get an opposite candle, like a red candle, you exit. If it continues green, then you hold on to the trade until you get a red candle, and then you exit on the red candle. Okay. All right. Grace says, yes, thank you. You're most welcome, Grace. Anyone else? Okay, Ryan says, yes, I like. If it's late at night, put TM on. What do you mean by TM? Oh, trade manager. Okay. Okay, yes, you can put on your trade manager. You guys can use, you have many tools available to you to trade this strategy and many other strategies. Okay, so you have many tools available to you. You have your trade manager, you have many other tools that you can use, many other methods that you can use to incorporate with this one to make it to your liking. Okay. Grace says, can we set it? Can we set this and forget it? I wouldn't say that you should set this method up and forget it, because remember, price is alive, it goes up and down. So you don't really want to do that, right? What you want to do is make sure that you have an area and a time where you want to enter. You have an area where you're going to place your stop, and you have a time or a condition or an area where you're going to look for your exit. Okay. So time is important. Distance is also important, and conditions are also important. So let's say you're aiming for a moving average, and once the price hits that moving average, you exit. That's good. If you're aiming for resistance or support, when price hits that resistance level or that support level, you exit. That's also good. If you're aiming for a trend line, when price hits the trend line, you exit. That's also good. So it's good to just have conditions that you're going to exit under. Okay. You don't want to open a trade and just let it run and hope that the market's going to continue moving to infinity. No, it's not. It doesn't work that way. You need to make sure that you set specific targets, have specific goals. All right. Any other questions, guys? Ryan says, so you don't use something like crossover. No, I don't use the moving average of 10 or 20. I used to use them back in the days, but I don't use them anymore. I only use the 200-point moving average. I find these smaller moving averages are more for trading on lower time frames. So when you're trading on lower time frames, it's okay to use them. But when you're trading on the 1 hour, 4 hour time frames, no. They're not very relevant in those time frames, from my opinion. Okay. Grace says, is 200 SMA? Yes, it's SMA. Simple moving average. All right, Ryan says, what does the MA 200 mean then? Okay, so remember, the lower moving averages are for lower time frames, and the higher moving averages are for higher time frames. Well, the 200 period moving average is a moving average that I find is used by more market makers, institutional traders. So I find that it's generally more respected in the market. And that's why I call it a dynamic support and resistance level. Okay. I find that it is well respected in the market. Like, we could just look at it. Like, if we just look at it, let's just go back a bit. Just look at it. Just look at how it moves. The price comes to it, it hits it, it bounces off it. Comes to it, hits it, it bounces off it. It breaks through, comes back. See this area here? It goes a little bit above it, but it comes back. Goes below it, it comes back, right? Comes back. Comes here, it goes down. Comes here, it breaks through. I'm expecting it to come back. See, it's coming back to this. Comes here, bounces off. Comes back, bounces off. Comes back, bounces off. Breaks through, I'll expect it to come back. See, so it's moving around this 200-point moving average, right? So it comes back to it, bounces off it, comes back to it, bounces off it, breaks through it because most likely because of some high impact news event or something would cause it to break through it. So it breaks through it, it goes up, it comes back to it. So this is just how it moves. It's like the 200-point moving average is a magnet to the price. All right, let me see here. All right, so Grace says, so if we want to use a crossover on 1 hour, 200 MA and 50, or what would you recommend? I don't really trade crossovers, so I don't think I may be the best person to give you any information on trading crossovers. As I said, I don't really find the lower moving averages to be that relevant. So I wouldn't really give any information on, trading crossovers. In my early, very, very early days in my trading career, I used to look at the crossovers, but it's lagging, it's late. And I don't like to get involved into a trade late. Plus, these crossovers are more designed for swing trading, and I'm not a swing trader. I prefer to day trade. So I need signals that are going to be more effective and signals that are going to be earlier. Okay. All right. Ryan says, so you use it the same way as the RSI. Above we buy, below we sell. So you're saying that I use the 200-point moving average the same way as I use the RSI? Not necessarily. It does look very, very close to the 30 point on the RSI, but I don't use it the same way. Okay, I don't use it the same way. If you look at it, you can see it looks like it's following exactly what the RSI is doing, but I don't use it the same way. Okay, it's actually different. Okay, but that's a great observation, but I don't use it the same way. It doesn't mean that because I'm above the 200 period moving average that I'm only going to be buying. Remember, I'm looking at trend, right? So I want to pay attention to trend. And if I'm looking at my short-term trends, just to try to put in a few of them, this would be my trend, right? So this is my downtrend. And if this is my downtrend, you can see here, whenever price comes below the 50 level, I'm looking to sell, right? So it's below the 50 level. I'm selling. It comes back. If it doesn't hit the 50 level, I'm going to stay in my sell if I'm looking to swing this, right? If I'm day trading this, I'll be looking at time. I'll be looking at time so that I can get out of the trade, okay? I'll be looking at this moving average as well. So if I come and I hit the moving average, that would be an indication to me that price potentially is going to bounce off that moving average. So I'm going to exit in that area as well, okay? So this is basically what I would do. Here you can see it's breaking out. So if it's breaking out here, it's telling me that the trend is most likely no longer down. We can potentially have a shift to the upside. So I'm going to wait to see if I have a close above. Okay. And I'm going to try to create this new uptrend as soon as possible. So once I have a situation where I can trend this move to the upside, sort of like, most likely this is going to be my first attempt, right? But this, as you can see, this one is very flat. So I'll look for my second attempt, which would most likely be something like this, right? So that's going to be my second attempt to trend this move to the upside, right? So I'll be following this one to the upside. So once I have an opportunity, and my opportunity will come somewhere around here to go long. Let's make this a bit bigger. So once I have an opportunity to go long, it's going to be either on this candle or on this one, right? I go long, I hold on to my trade, and it all depends on the time. This is around 2 to 3 a.m. Eastern Standard. So, well, actually on this candle, it's going to be 4 a.m. by the close. So I'll be looking to enter here, and I'll be holding this until we have 8 a.m. to 9 a.m. This is going to be the start of the US session. If I don't have a reason to exit at that time, I'm not going to exit. Then I have until 12 p.m., between 12 and 1. So if I have a reason to exit around that time, I'm going to exit. And I do have a reason to exit around that time. You can see between 1 and 2 o'clock, we have a red candle. So I'll exit at that time, and I'll be done with this setup. Okay. What I'm going to do is I'm just going to look for the next setup, and to find my next setup, I just simply wait to see if I have another trend like that. So we have price moving down, and it's created a trend. So this is a correction. I'm going to look to see when I have a breakout. So once I have a breakout, I can jump in, and I need to look at the time as well. So if it's going to be around the session open, the session break time, the session close time, these are going to be good times for me to look to get into the trade. Okay. So these are the things that I'm going to look for. Trend breaks. If I'm above the 50 level on the 30 RSI, I'm going to be looking at long. If I'm below the 50 level on the 30 RSI, I'm going to be looking at shorts. Okay. And I pay attention to my trend lines, pay attention to my trend breaks, and pay attention to my session open, session lunch times, session close times. Okay. Ryan says, do I use any notifications at all? When it comes to notifications, I don't really need to use notifications because of the times that I'm in the market. But I mean, if I'm going to be stepping away or, you know, something, then yes, I would definitely want to have some sort of notification to, you know, keep me alert so that I don't miss out on an opportunity or miss out on an opportunity to close out a trade. Okay. So I don't want to miss an entry. I don't want to miss an exit. So if I have a trade running, then definitely I'm going to want to put on some sort of notification to kind of keep me alert. Okay. All right, guys. Well, this brings us to the end of this evening's class. Thank you so much for coming. It was indeed a pleasure having you once again. Bye-bye for now. All right, Bella says it was an amazing class. You're most welcome, Bella. Lovely having you. Thank you, everyone. Thank you, everyone. It was a pleasure indeed having you guys here. You're most welcome, Grace. You're most welcome, Ryan. Everyone, you're most welcome. Bye-bye for now. Have yourselves a wonderful evening.